Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2025, December 29th, and we're doing the end-of-year thing markets love. Thin liquidity, big moves, and everyone pretending it was all priced in.
It's the final week of 2025, the week where one hedge fund intern sneezes and copper hits a record. I'm here to ask the questions the spreadsheets are too scared to ask.
Story 1. Oil is pushing higher. The driver, per today's headline, is that U.S.-led talks to end the war in Ukraine didn't produce a breakthrough, while China pledged to support growth next year. Two forces that can lift crude: geopolitics and demand expectations.
So oil is basically reacting to peace not confirmed, and China says it'll try. That's the most market sentence ever. Why does my wallet always catch the stray bullet?
Simple version, oil is the world's delivery fee. When supply risk rises, or demand is expected to rise, prices can move fast. For households, higher crude can feed into gasoline, flights, and shipping costs, which can show up in everyday prices with a lag.
So if oil is the delivery fee, I'm paying surge pricing for geopolitics. Actionable question, do we hedge this with walking? Or is this where energy stocks and broad commodities funds start looking cute again?
Actionable takeaway. Treat energy as a risk factor in your budget and portfolio. If energy costs spike, it can pressure consumer spending and complicate inflation. Investors often watch whether oil strength is a one-off headline move or a trend that starts lifting inflation expectations.
Story 2 is my favorite because it sounds like a pirate treasure. Copper surged to a fresh record close to $13,000 a ton in London on supply fears. A ton? That's like a lot of plumbing.
Right. Copper near $13,000 per ton is a big signal. Copper is a bellwether metal because it's used in construction, power grids, electronics, and EV infrastructure. Supply fears can be about mines, refining bottlenecks, inventories, or disruptions, any of which can tighten the market quickly.
Explain it like I'm 5, but also trying to retire. If copper is expensive, does that mean the economy is booming? Or does it mean everything is broken and we're paying extra for the same metal?
It can be either, which is why context matters. Think of copper like the wiring inside global growth. If demand is rising faster than supply, that can hint at capex and electrification momentum. If supply is constrained, it can also be a cost-push inflation story, higher input costs for builders and manufacturers.
So copper is either a growth high five or an inflation face slap. For normal people, does this show up as your renovation quote just doubled, or is it more subtle like appliances cost more?
More the second, with some direct hits in construction and electrical work. Actionable takeaway. If you're planning big home projects, get multiple quotes and lock timelines. For investors, watch whether copper strength is broad across industrial metals or isolated. Broad strength can reinforce the reflation narrative going into 2026.
Story 3. China's central bank set the yuan fixing at its strongest level in 15 months, and offshore yuan briefly broke through the 7 per dollar line. That number is like a psychological boss fight, right?
Exactly. The headline says the midpoint was set at 7.0331 per dollar, strongest since early October 2024, and the offshore rate briefly moved through 7. Markets watch 7 because it's been a widely referenced threshold for sentiment, capital flows, and policy signaling.
So when the fixing gets stronger, is China basically saying we'd like a little less chaos, thanks? Or is it more like putting a nice filter on your profile picture? Still the same person underneath.
Good analogy. A stronger fixing can be a signal of comfort with currency strength, an attempt to guide expectations, or a reflection of broader dollar moves. Why it matters. FX affects import prices, exporter competitiveness, and global risk appetite. For investors, it can influence emerging market flows and commodity pricing at the margin.
Bonus story because I can't resist. DigitalBridge shares reportedly jumped after a report that SoftBank is in advanced talks to acquire the data center investment firm. Translation, AI is hungry and it eats electricity and real estate.
That's the core. Data centers are the picks and shovels layer for cloud and AI workloads. If a major capital allocator is circling a data center platform, it underscores that the constraint isn't just chips. It's power, cooling, land, and fiber. For markets, it can ripple into REITs, utilities, and infrastructure financing.
Today's theme is real stuff matters. Oil, copper, currencies, and the giant warehouses that keep your apps alive. If you learned one thing, let it be this. Finance is just the story of who pays the delivery fee.
Quick recap. Oil moved up on geopolitics and China growth support. Copper hit record levels near $13,000 a ton on supply fears. China's Yuan hixing strengthened to a 15-month high, with offshore trading flirting around 7 per dollar. And SoftBank's reported interest in DigitalBridge highlights the ongoing build-out of AI infrastructure. Subscribe for the daily briefing, and if you're watching 2026 themes, track energy, industrial metals, and FX together, not in isolation.